Okay, good day, everybody. This is Jim Kenney, and this is the Option Professor podcast for August the 13th, 2018. Glad to be with you here today. As always, I do start out with a disclosure that past performance is not necessarily indicative of future results and that there is risk of loss in trading both short term as well as options. And you should discuss with your clearing firm and your broker and the people you're doing business with what exactly is suitable and unsuitable for you as far as this type of activity. I'm going to be giving you my opinions and my insights, and basically that is what I'm going to try to do today. There is a lot going on here this week, so I did want to get right into it. I will be discussing things such as the stock market, interest rates, the U.S. dollar, oil, gold, silver, agriculture, and some stocks that are in the news. So let's get into it right now, because this week is probably going to be a pretty big week. A lot of news coming out on the consumer. Last week the market went up above 2850. You can see the S&P chart on your screen right here. You can see it went above the 2850 area, and now it's rolled over. If you look at under indexes such as the Russell today, the Dow Jones Transports, the international ETF like EEM, and some sectors such as materials, financials, and industrials, plus the QQQs, they've all rolled over here this morning, bouncing back a little bit as we speak. But the gap right there around 2850 on the S&P, if it is not filled as the week goes on and we take out 2800, the reversal to the downside could be more severe than people think. So keep an eye on that. And at Option Professor, of course, we do have DVDs that go over different strategies such as hedging using put options or collar strategies. And I'll try to explain that a little bit to people, to you guys a little later in the broadcast. With regards to news hitting, a lot of news about the consumer this week, so keep your eyes and ears open. Tomorrow we're going to have tomorrow we're going to have small business optimism as well as import-export prices. With these tariffs, you don't know how that's going to affect the import-export prices, so keep an eye on that for tomorrow. They're expecting an up number. Wednesday, it really hits the fan. We got retail sales looking for a small gain because auto sales are not doing that great. And then also you've got business inventories, and they're looking for a small buildup as the inventories are not really keeping pace, or it has not kept pace with sales. Productivity and the housing index coming up. Thursday, housing starts, and then Friday, the leading indicators, which are supposed to be upbeat. And then, of course, consumer sentiment, which is at a very high level, along with the stock market, and they are supposed to be flat, but at the high level that's been established. That high level obviously is of concern, because if the consumer starts pulling back at all, there's quite a bit of rolling over that could be done on consumer sentiment because of the fact that it's at such a high level of 97 to 99. It's supposed to be at about 98 tomorrow on Friday. So keep an eye on that. There's some stocks in the news. There's some concerns with Tesla, with Musk coming out by tweet that they have funding for some kind of a privatization of the firm. That drove the stock up big time last week. Up towards 390, even some people were saying above 400, and then you can see today it's in the 350s. So it certainly got a lot of boost from that, and now they're looking into whether it was a factual securing of financing or just a speculative one. And then, of course, it could not hold its water because some people are starting to think that the financing may be more suspect than at first thought. And the SEC is also looking into it as well. So there's a lot of volatility in Tesla as well. I was reading that the Saudi prince has been going on a little bit of a run on purchasing some of the tech. In Saudi Arabia, they are trying to rotate over the next 10 years or so years from a petroleum oriented country into more of a private sector type country. So the prince that does a lot of investing and pretty popular over there, pretty well known as an investor, picked up a couple of tech stocks. One is Snap. So let's take a look at Snap and see if there's anything going on there, because he did put in, according to what I read, 250 million, 2.3% stake. Now, Snap is at, let's take a look at the graph. Let me give you a full size look at that. You can see Snap, as well as Twitter and Facebook, got whacked pretty hard when they came out with some user drops. We saw a big drop in Facebook, big drop in Twitter, and this one got hit a little bit as well. There seems to be technically pretty good support around the 12 area, and there seems to be some resistance between 14 and 15. The moving averages on this company is at 13 on a 50-day average and 14 and a quarter on a 200-day average. So you could either wait to see if you can get some kind of a breakout above 14 or 15 and above these moving averages to see if there's going to be some follow through to the upside. Strategies that some people use to take advantage of a market they think is going to rise would either be using limited risk call options and possibly buying a significant amount of time. They're called leaps. And basically, they could be used to take a position of limited risk with leverage, with an expiration date maybe going out 9 months, 12 months, 18 months. Price them out, see if you think there's any value to that. But that's a way of getting a position established in this stock with limited risk and far less money out of pocket than buying the stock itself. Selling put options or credit put spreads is another that people sometimes look at, and using a strike price of 12 or 10, see if there's any premium there worthwhile to sell. If the stock drops, you'll be put stock. You'll be liable to buy 100 shares of stock at the strike price minus the credit that you receive. And that's another way of trying to work with a market that you think you'd like to participate in. But you're looking for an option strategy to enter it at a cheaper price than the current value. Some people also do what they call selling of a put and then taking the premium and buying a call. Again, when you sell a put, you're agreeing to buy the stock at the strike price until the expiration date. And again, there are 100 share units on each option. And so you'd have to make sure you have the money and the wherewithal to buy the stock if it's put to you. But say you sold a put at 12 here and it was never going to get down to 12, so you may not get put stock, and you took the premium and you bought a $14 or a $15 call with it, you'd have a position long as far as you'd be having the right but not the obligation to buy 100 shares at 14 or 15, whatever strike you chose. You'd be using the premium that you took in at 12 to pay for it. So if the stock takes off before they expire, you'd have the right to buy at the strike price above on the call, and you would have financed it by selling the put at 12. That is where you sell the put and use the premium to buy the call. The risk there on the downside is you are agreeing to buy the stock at where you sold the put. And so you'd have to be willing and you'd have to be able to buy the stock, so come up with more cash if in fact they put stock to you. There's other adjustments that you can use on that position. This is certainly not a full disclosure on that strategy. The Option Professor does have detailed DVDs that explain the strategies. And of course, we encourage people to investigate those as well. But Snap is something that the Prince put some money into. Doesn't mean it's going to go up, but it is a fact that he did put it in there. And then there's another company over in Europe, Deezer, which is a streaming music tech company that he also put a substantial investment into as well, at least substantial in terms of dollar figures, might not be substantial for his net worth. These guys are multi-billionaires, obviously. Okay, another one that had a lot of volume and had gone up a little bit was Vitamin Shop. And the symbol on Vitamin Shop, I believe, is VTI. That is, let me double check that quickly. We'll just go like this and get it real quick. And while I do that, I just wanted to explain on Vitamin Shop, the volume has been very, very large compared to where it was. VSI is the symbol. And the volume on average and shares here done today. So there seems to be some pretty high activity here volume wise. And you can see from the chart, the stock has been going from 4 to 6 to 8. Now it's up to 12. So obviously it's had a very big run. And the moving averages are in the $7 range for the 50-day and the $5 range for the 200-day. So it is a bit overbought basis the moving averages. The danger there is that it could pull back. Those people that are in it and they wanted to protect or hedge their risk may consider buying a married put, which is a strategy that you use to protect your stock against coming back down to 8. Or also some people might consider a collar, where you sell an out of the money call, let's say using as an example 14, and then using the premium to buy the 10 put. And then basically you've got a window of 14.10 for it to operate within. But you know when you go to bed at night, you've got insurance at 10, and you still got upside potential to 14. But obviously, there's a relatively large short interest in this stock of 18 to 20%, and that all might be causing some upside movement as well. But it just made a new 52-week high at $12.15. So both Snap and Vitamin Shop caught my attention, one for the volume and one for the participation from the Saudi prince. So again, one is clearly broken out to the upside, and that would be the Vitamin Shop. And then the other would be one that still needs to get above some hurdles on Snap, getting above 13, 14, 15 to get above some resistance hurdles. And only time will tell, how that'll work out. But those are two right off the bat that look interesting to me. And then basically, I'd like to move forward here and go through some other indicators that are some indexes that I'm watching and give you an idea of what looks like is going on. This one here is called the transportation average. Again, it had a nice big move recently upward, and now it's down 24. And if it can hold this 11,000 area, that would be very positive. If it starts breaking under 11,000, then I'd be more concerned that these things are rolling over and that August could have a more out of it. We had a very big run up in July, 3.6% in the index. That's a big 1 month jump. And if it's not confirmed by more positive news, obviously the earnings were very good and the revenue numbers quite good as well. And that's what's caused the big run up in advance of those numbers coming out. Those numbers are now pretty much coming out. And so they may be cooked into the prices. And if the Q3 numbers, your numbers for July, August, September, are not at that same pace, and if there's some news that makes people a little bit concerned, there's an awful lot of people in the market, and if they decided to sell and take some profits, it could cause some pressure in the month of August. Again, only time will tell. But today, I'm going to hit a 10-day chart so you can look at some shorter-term activity here. And here on the transport, you can see it rolled over from 11,250. It's bouncing back up here. We'll have to see how they bring it home. The Russell, that's a 2000 index. That's another one that had gone up quite a bit. And in the last 10 days on it, you can see it also has rolled over a bit. It's pouncing up a little bit, but you get the feeling of a little bit of a rollover there. We'll have to see what goes on. International trading, a lot of people think that international trading was going to be something to look at. In the last 10 days, you can see it's rolling over as well to the downside. A lot of gaps there too. A couple of sectors that I thought might be starting to get constructive. I'll show you an ETF here on the industrials from Vanguard. Again, there's many ETFs out here, but you can see in the last 10 days, there's been a rollover in the industrials. And then you are looking at the financials, which everyone was kind of getting excited about because they were starting to look like they might be going someplace. And then in the last 10 days, the financials have also shown a bit of a rollover, as you can see, to the downside. Nothing tremendous, but certainly looks like there's some selling that has come in, and there's a big gap there. So if it can go up and fill that gap and then keep going, that would be very positive for the financials. A couple of the financials that I've been keeping an eye on, Goldman Sachs was one of them. They just are in some type of talks to get into the liquefied natural gas, LNG. That was a kind of a big report from them. But again, They had a big run up towards 240, and now they're back on the defensive at 227. So I'm concerned, my personal opinion, that August could be a rougher month. And then as we get closer to the election, maybe you could see some resolution to some of this tariff talk, or maybe the Trump administration will do something to stimulate the markets to go back up. So there's happy faces on the voters' faces at the midterms. And so, this month of August could be rough, but it could also be a prelude to a very good October, November, December. And so I am along the lines thinking that we could be darkest before dawn if they do hit the markets here in the month of August. A couple of stocks that if China and the U.S. Could get together and call off the dogs. Wynn Resorts has had a very big drop from the 200 area, and even in the last 10 days from 170 down into the 140s. And of course, they have a lot of business over in Macau. And the Sands Resort is another one. Symbol on Sands is LVS. And that is another gaming stock that might also benefit if China and the U.S. could possibly get going a little bit. Again, this is a stock that's gone from the 72 area down to 67, and it would be a beneficiary, I think, if you were to get some backing off on the tariff talk and all that kind of stuff. So there's a few stocks in the news that I thought were kind of interesting in some sectors, but right now it does look like the market's on a little bit of a defensive. The VIX really gave you a great key last week. It dropped down into the 11 area. I think it might have even gotten lower. Let's take a look. It might have got under 11. Yeah, it went out to 10.5. Now, when the VIX goes down to 10.5, what you know is that your put option way down, and insurance, meaning buying put for insurance, also had, and that is generally a time where you have a market that could be susceptible for a drop. And that's exactly what we've seen here on Friday and Monday, a market on the stocks that has rolled over. And again, the VIX has had a big jump. That's a 50% move in the VIX almost, from 10.5 to 15. Now, again, there's a big gap there. So maybe the VIX may come down and try to fill that gap, because 15, in my view, has been somewhat of an equilibrium, which means if you get down to 10, likelihood that you're going to see a drop in the market. And when you go up towards 15, you're at more of an equilibrium. If you went to 20, then, of course, a rise in the market might be more in line, because that would be telling you that the VIX is at a higher level. And so that's, again, some of the things that I've been seeing, 20 being a high level, 15 being equilibrium, and 10 being a low level for the VIX. Again, I watch the VIX quite with an option slant. Of course, you're going to be watching the VIX quite a bit. So that gives you some of the ideas that's going on here this week, some of the stuff that's going on in some of the stocks in the news. GE just sold $2.6 billion in their energy unit. And so they are still raising cash. Looking at GE now, you can see even after making that big sale to Starwood, they still are under a lot of pressure. So I guess people are still not very keen on GE, and they're probably wondering if the dividend's safe looking forward. Of course, they did cut the dividend quite a bit, and that's, of course, to make it in line with what the stock's trading at now. So that was another one that hit the news. And then another one that people were talking about is Mylan Labs, which is a generic drug maker. And that's MYL is the symbol. And let's take a look at what that's doing right now. MYL. And that is going to show that MYL, let's see here. 1 second. Again, generic, their main competitor is Teva. And of course, Buffett had taken a pretty big position in Teva. And let's take a look at Mylan, of course, had a drop from 48 in the last year down towards 36, and is currently trading at 37.59. And let's get an idea of what the moving averages look like, and see if there might be something of value, because some people were thinking that different with other firms in aligning themselves with other companies might be in the cards here a little bit. You're looking at the moving averages at 37 and 39, and it's trading at 37. So if this thing could get above 40, I think it would become much more interesting. So I would keep an eye on this because, again, it's in the pharmaceuticals, it's in the generics, its main competitor is Teva, and they were trying to do a little bit of a alliance with some other firms to try to increase their market share. I am going to go quickly now over a couple of different markets, which I like to update you every week. And the U.S. dollar is very important, obviously, and the value of it is very important. Let's take a quick look at what the value of the dollar looks like right now, because it does look like it's trying to break out above the 96 level. I was thinking that it might have some resistance between 94 and 96, but now it looks like it's breaking out to the upside. If we look at a 10-year graph on it, it might tell us a little bit about where there could be some resistance. So let's take a quick look there. Yeah, so it's it could be on its way to 100 because you can see that's where those lows were, and it is breaking out above the 96 area. So if it goes towards 100, the dollar is going to be quite strong, and that's going to be very difficult for the gold prices, which got hit here today. They're down around 1,200, and the silver's at about $15 an ounce. So the ratio is hanging around 80. I've been noticing that as long as gold and silver are not going anywhere sideways to lower, the ratio seems to be hanging around 80. So if there were a point where the gold was going to go someplace because the dollar weakened, inflation picked up, or whatever, it looks like silver might be a better value because of the relationship between the price in that 80 to 1 percentage area. Taking a look again at the Treasury, that's another one where a week or so ago, yields jumped from 2.8 to 3. Now, Jamie Dimon was out there talking, and he was talking about the potential of the Treasuries going up towards the 5% area over time. Well, if we're going to have a robust economy, and if the stock market is going to go substantially higher, then a 5% yield on the Treasury might make some sense. Right now, it's stuck between 2.8 and about 3. Let's go back to a 1-year graph and put it back in that perspective. And now you can see the graph showing you the 1-year graph and how it is trading in that range I just mentioned of 2.8 and 3. If it breaks under 2.8, yields are going to start dropping. And if we got a big correction in the stock market, that may happen. But the Fed seems to be on a tightening cycle. The numbers still seem to be very strong for the economy. People are very, very positive on the economy. And so if they're correct and the economy is as positive in the future as they're talking, then we would break above the 3% at some point, and then the 4% rate, which some people think we should already be at based on the economy and based on employment being at under 4%. If we do go up into those levels, a break above 3 and 320 a little bit more, that we're going in that upward direction. Right now, looking at that graph, it's hard to make any definitive statement which way it's going. It's really stuck in the middle of 2.8 and 3. Okay. Again, oil prices are on the defensive here, and I wanted to get a chart up on that so you get an idea, because the crude inventories seem to be rising, and the prices have been slipping. And we'll take a look at crude oil prices right here, and this will give you an idea of what's going on. If we can get this thing to come up pretty quick, it's at $66 and change. It went down towards 65 today, so it's bounced to $1.60. There seems to be some support at 65 if you look at the graph. Let me get you a better perspective on the graph. You can see very quickly here. There you go. 65. If it breaks 65, this thing could go down pretty good because you've got lower highs there, right? So you've got a market that's trying to roll over a bit. If it breaks through 65, and that's why probably it's bouncing off of 65, then this thing could have a much more significant drop. Getting back above 70, those numbers of 75 and 80 that people are talking about would make more sense. So keep an eye on crude. Breaking above the 70 area, would be pretty darn positive, and breaking under 65 and then 63, there's not much underneath it. So you can see that there is some vulnerability in oil right now, if in fact that were to occur. Okay. Again, one last thing I'd like to show you here is in agriculture, which has been getting very damaged by the tariffs as China has been going elsewhere for their soybeans. And basically, the tariffs are hurting the farmer. That's why you've had a situation where the subsidy, $12 billion subsidy was kind of put together. And okay, I'm having a little bit of difficulty, so I'm going to go back to the S&P and the actually, I'd like to show the Qs right now for you. But anyway, suffice to say that the soybeans have been trading between 8 and 9. And if they could get an agreement with China, that could be very positive for the soybeans. So keep an eye on that. A break above 9 would be pretty impressive. Okay, let's turn real quick over to the Qs. Let me put one more Q up there so you can see the Qs. And we'll get that going real quick here. Okay, there's your Qs. And again, tech is hanging in there quite good. I was noticing Google and Apple and Nvidia and Amazon and those kind of stocks and Netflix are hanging in there very well. So it does seem like people are very unwilling to get rid of the tech sector. And again, the Saudi Arabian country seems to be loading up a little bit in the tech sector. So that could be telling us something. But they definitely are not so keen on the sectors like the industrials and the financials and sectors like the materials. Again, the Qs right there, having some situation there where it's right near the all-time high of 182.93. And then I did want to just look at it on a 10-day basis because it was showing some signs of rolling over a little bit, but not much. And there you go. So again, it had that gap. It filled that gap. We start breaking under 180. Then, of course, that might be something to jump on as far as looking for some follow through. Because, again, you do have a high up there at 183 area, a lower high around 182. Now you have a higher 181. You start taking out 180, and that's starting to look like lower highs and lower lows. And, of course, that would be more of a rollover. Okay, well, I'll tell you what. For this week, I'm going to wrap up here and just give you a little bit of a announcement. Again, if you have any questions on any of the markets or on any of the stocks and you'd like to learn more about some of the things that OptionProfessor can do for you, or if you want to just ask me some questions, I'm more than happy to give you a hand. And I can be contacted at OptionProfessor@gmail.com. That's OptionProfessor@gmail.com. I certainly invite you to contact me. Let's talk about this stuff. Let's go after it. Let's see what we can find out. Let's go back and forth with each other and find out what the best outlook could be and come up with the best information we can come up with. Until next week, I would like to wish all of you the best of trading and keep your eyes open. A lot of news on the consumer this week. If it turns out very, very strong, again, that could be a tailwind. And of course, if it looks like things are subsiding with the people so bullish and so long the market, if the market had any kind of a reason to roll over, you could always get an order imbalance. That VIX is at 15. If it's going to jump to 20, then I think the stock market will be rolling over. If we're going to back down towards the 12 area, then of course this market may get legs again. So watch that VIX very closely because I think going to 20 or going back down towards 12 or 11 is going to be a little bit of an indicator on which way the general direction of stocks might be going this week. Again, until next week, I'm Jim Kenney, wishing you all the best of trading, and thank you very much for listening. I'll be back with you next week.